Hello, I'm Robert and welcome to my channel where I discuss everything automated algorithmic trading or algo trading. We're going to pick up this discussion where we left off in the last video, talking about game-changing profit-making strategies that work. Now, if you remember from the last video, I showed 4 different accounts with 4 different settings and showed that how even the slightest changes can cause disaster or profitability. Today I'm going to show the second part of the secret of the success for the French vanilla account. Stop losses happen no matter what. You're going to take losses. As we've seen in the previous video with the different accounts, those losses can be disastrous. And even if we look at the current chart here, we could see in the beginning I took losses. Personally, this has always been a problem for me. I'll get on a good run, I'll do very well, I'll rack up a huge amount of profit, and then the market will just decimate my portfolio. Over and over, this has been a vicious cycle I've seen in my own personal trading and in countless other trades. And it doesn't matter what strategy is used. And I'll put this in the context of strictly automated trading, using the computer. This does not apply to manual trading, even though it might. But for the purposes of right now, the computer is in control of my money. And as we can see from the chart, it lost some of my money. So stop losses are not avoidable. They're going to happen. But what if there is a way to change the entire dynamic of the market? To look at the market in a whole different context? To see the market where losses are taken on your terms and not on the market's terms. That's the kind of research I've spent several years looking at, trying to figure out how can I flip the narrative? How can I change when I take losses from when the market dictates to when I want to take them? Because as we can see from the curve, I haven't taken any losses at all in the range that I've just highlighted, which is basically late February, early March until recent. Most recent data being today. That entire time frame, no losses. Or at least that's what it looks like. But the truth is, I have taken losses. Every single trade, I deliberately take a loss, or what I will call a micro loss. Now the equity curve doesn't show it, but if we zoom in real close, we can actually see the truth. So let's zoom in and really look at the equity curve. Take into account the whole different section. And we're going to get in real tight and real close here. Let's go even a little closer. Now we can begin to see the truth behind my technique. I take a profit, and then I take a tiny loss on every single trade. And it doesn't matter. I do this constantly. I'm not avoiding my losses. I'm just deciding when I'm going to take my losses. So by actually looking at every single trade and taking a loss with every single profit, I'm absorbing the losses before they actually become a huge loss, like the beginning of what this chart shows. It's a technique I call reduction. And by reducing the number of trades by 1 unit on every single profitable sell, I am literally burning off my oldest positions over time. So let's really look at this in a methodical approach and see how it actually plays out in practicality. So we can see with the exposure chart, it shows how things look with my exposure. If I walk away right now, and I have quite a bit held, so let's zoom in and see if we can see reductions on the exposure. And we can. They're obviously not as clear as some of the other parts of the chart. But every time we have a peak like this, we see where I am making profit and taking losses, back to back constantly in this unending cycle. But we can even go to the trades, and on the trading chart, this is where I really showcase the process altogether, where I deliberately demonstrate the reduction technique in the actual framework of the trade cycle. And this chart is monstrous because I've taken a lot of trades, as we'll see very shortly. But the cyan or light blue lines, those are my reductions. We can see at the beginning of the chart where I have taken the losses with the red lines. Let's zoom in and actually look at it. These are hard stop losses, and they hurt. As we've seen from lemon meringue, strawberry delight, and blueberry cobbler, these are vicious. So as we look at our mechanical process, we think about the market in a different context, and we begin to actually piece together and see how this really plays out. And that is really what the important part of reduction is. Now let's look at the reductions, the light blue or cyan lines. And we can see where they start at the oldest trade that I have. And it burns off the oldest trade I'm holding 1 unit at a time. Now there are some rules for this to work. And they're very critical rules, because if you don't keep them this way, you'll lose money. Because remember that the reduction is deliberately taking a loss of 1 unit. So 1 unit loss, always. So every profit has to be able to make money and absorb that loss. So what I'm doing is I'm averaging my profits based upon 200 units. So I'm buying 200 units and selling them at a profit. And then on my oldest position, I am selling 1 unit at a time. And that creates the impact and effect of a micro loss. That micro loss is then absorbed into the trade cycle completely. And over time, if I have 200 units per position, then 200 micro losses eats off that entire position. So instead of taking it as one big loss when I do hit a stop loss, I am eating away at those micro losses over time. And I am able to actually absorb those into my profits without actually even taking a hard stop loss. Now that doesn't mean that the market can't move to the point that I might still end up with a hard stop loss. But by using this kind of technique, I am mitigating those losses drastically. Let's see if I can zoom in to one particular area and actually go through and get a close-up. Well, that's too close. Okay, now that the internet has finished conspiring against me, let's look at the reductions in a close-up view and actually see how they take place. As we can see from the chart, we can see the positions of where the units have been burned off. And we can see that I have burned off quite a few older units over time. And that's the real significance of this technique and why it works. These would normally have been hard stop losses that would have taken a very bad bite out of the portfolio. But because I'm taking little pieces off every single profit, I'm absorbing them without affecting or hurting the portfolio in the long term. In essence, I've turned my losses into a risk mitigation technique. Instead of taking them at once, I spread out the loss constantly. So as we look at this particular chart, we can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 units or 11 trades completely burned off. And now my trades average 200 units, so that's how much I've burned off constantly. Basically 2,200 units of losses that I would have taken that would have been a very painful bite. So I've negated all of that through a careful process of risk mitigation. So let's actually see the numbers. So looking at the numbers, actual profits per month, the total reductions, everything on the table, and how this account actually weathered the market. So we can see up here, these are my actual monthly profits. Month by month, how much money this account made. Now you'll notice every single month has been a positive amount. Even though I did take 41 stop losses. 41 times the account has deliberately lost money. But you don't see it in the profit. That's because I've also taken $100 in reductions. So I've taken a deliberate, intentful loss of $100. I have a total of 5,784 trades, and I have a total or an average of 578 trades a month. Now, because I've taken a reduction on every single trade, that means I've taken 5,784 reductions. And we can see that my reduction of 1 unit has only been 1 penny. But my average profit per trade has been 6 pennies or 6 cents. So this is the significance of the technique. You need to make sure that you're purchasing and selling more than what you're taking for a loss. In this case, I am taking a 5-cent profit. 6 cents minus 1 cent leaves me 5 cents to the good. So every single loss I take, I'm making 5 cents. So even in my losses, I'm still being profitable. But because of the way this whole system works, I know exactly and can calculate a crude average of what's going on. For example, here I take an average of $36 of profit a month. Now that's already figuring out my reductions. My reductions are taken out, said and done. So my profits are after all of my losses, what I walk away with. I walk away each month with roughly $36. All of that is figured out. Now if I didn't take the reductions, I would walk away with $46. But I would have those hard stop losses, and the account would look like blueberry cobbler, lemon meringue, or strawberry delight, with those losses really hitting home hard and vicious. So, the whole approach behind this technique, the secret, is when to take the losses. Instead of taking the losses when the market dictates, I am taking the losses when I dictate. Now let's actually see this in a numerical form, looking at the raw numbers from the bot itself. We are now looking at the actual logs from the bot. Every time I sell, every time I reduce, every time I purchase. Now this is the most recent information from today. And we can see I made a whole string of purchases. These purchases, each unit clearly identified. And then we can see I made a couple of sells. Again, each unit clearly identified. But what stands out, let's slide this over a little bit. What stands out are the profits. For example, for this particular profit, I sold 212 units at $1.10, and I made 7 cents profit. Nice and easy and simple. But right afterwards, I took a reduction, a deliberate malicious loss of 1 unit at $1.10, and I lost 3 cents. So the total combined trade made a 4-cent net profit. We see the same thing with the next set or the next pair. I sold 211 units at $1.10 and made an 8-cent profit. I then came right behind it with a reduction for a 3-cent profit, walking away with an average profit of 5 cents. That is the secret of reduction. Always make sure your total selling amount is over your reduction amount, and you'll always make money over time. And as we can see, when I scroll back in the history, there are several times where you see the large amounts. Sell, reduce, sell, reduce, sell, reduce. This is a constant within this technique. to always be able to sell and reduce simultaneously. That is important. You always want to make sure that you keep that process going, because that's the whole secret behind how this system is always able to mitigate losses. Not by avoiding them, but by deliberately taking them constantly. Now, let me know what you think about this technique. Is this something that you would like to test and try in your own trading? Share your thoughts. If you like this video and want to see more videos like this, please hit that thumbs up. If you're not subscribed, please subscribe. Let me know how your trading may or may not be affected by this kind of strategy. And remember though, as we recap this, your selling units must always clear the reduction. So test this carefully in a paper trading or demo account. Get your balance right. That way, when you do apply it in a real account, you'll see success like I have demonstrated here. A clear and consistent approach that can weather a market significantly better than any other techniques that are realistically available right now that take hard stop losses. Thank you for watching, and until next time.